In this video, we're going to be looking at the stock picking service AlphaPix, and you'll see why it's my favorite place to get stock picks. If at any point you want to try AlphaPix out, just click the link in the description and you'll get $50 off. Please note that I am an affiliate for AlphaPix, and if you click the link, I will make a commission at no extra cost to you. First, let's start off with what AlphaPix is. AlphaPix is a stock picking service that delivers 2 data-driven stock picks each month to hold long-term. These stocks are rated by Seeking Alpha's powerful quants that look at valuation, growth, profitability, momentum, and revisions. These quants have been studied by third parties and proven to be highly effective. I'll get into this later, but AlphaPix has absolutely been crushing the market since its inception over 2 years ago. Additionally, you'll get alerts when ratings shift to sell and when new picks are added. Everyone has busy lives, and AlphaPix makes investing very simple. If you need to add a stock or get rid of one, they'll let you know when. Also, the stock picks cover multiple sectors, which is pretty unique. Most stock picking services tend to focus on one type of stock or industry. For example, many services only recommend dividend stocks or only recommend early-stage tech stocks. AlphaPix's stock picks range from tech stocks to clothing companies, finance and insurance, automotive, healthcare, and more. This diversifies your portfolio and ensures you're not too concentrated in a single sector. And lastly, when you become a member of AlphaPix, you'll get access to the complete portfolio that makes up over 20 stocks. You'll also get the original write-up about each stock so you can see exactly why the stocks were picked in the first place. The most impressive thing about Seeking Alpha is they have managed to beat the market in the last 2 years very easily. If you've been investing long enough, you know this is very hard to do. Here's an explanation of how Seeking Alpha picks their stocks and why they're so successful. The picks are made based on Seeking Alpha's quant rating system. Seeking Alpha's quant ratings are an objective, unemotional evaluation of each stock based on data, such as the company's financial statements, the stock's price performance, and analysts' estimates of the company's future revenue and earnings. Over 100 metrics for each stock are compared to the same metrics for the other stocks in its sector. The stock is then assigned a rating, strong sell, sell, hold, buy, or strong buy, and a score from 1 to 5, where 1 is strong sell and 5 is strong buy. One of the main factors that go into rating a stock is valuation. Valuation looks at 20 different metrics like PE non-GAAP, enterprise value to sale, price to sales, price to book, and more. The valuation is given a grade compared to other stocks in its sector. Next, growth is another factor that determines a stock's overall score. The growth grade measures the company's growth relative to other stocks in its sector. The growth grade is derived from a comparison of the stock's historical growth metrics, such as growth in revenue, EPS and cash flow, and analyst estimates of future growth, to those of the other stocks in its sector. After that is profitability. The profitability grade is derived from a comparison of the stock's profitability metrics, such as gross profit margin, net profit margin, return on assets, return on equity, and asset turnover, to those of the other stocks in its sector. And finally, momentum is factored in. The momentum grade is derived from a comparison of common momentum metrics, such as long-term momentum and medium-term momentum, to those of the other stocks in its sector. Additionally, AlphaPix is headed by a true expert in investing. Stephen Kress is the head of quantitative strategy at Seeking Alpha, where he leads the development of the company's proprietary quant rating system. He has extensive experience in finance, having spent over 30 years in roles focused on stock selection, portfolio management, and financial analysis. Kress is known for his data-driven approach, utilizing quantitative models to identify high-performing stocks and sectors. Before joining Seeking Alpha, he worked at several prominent investment firms and brings a deep understanding of market dynamics, risk management, and investment strategy to his work. His insights are widely followed by retail and institutional investors alike. Now let's look at some of the stock picks Seeking Alpha has recommended since launching and how they performed. In December 2022, AlphaPix recommended Modine Manufacturing Company. I've actually never heard of this company, but that's the beauty of Seeking Alpha's quant ratings. You'll get recommended companies you would never be able to find on your own. Modine Manufacturing is a player in the automotive parts and equipment industry with a diversified product offering that includes commercial electric vehicles and electric vehicles. In less than 2 years, this stock has grown an incredible 446%. That means a $10,000 investment would be worth over $44,000 in this period. MI Homes is another company I have never heard of, and Seeking Alpha recommended them back in November 2022. You would think with high mortgage rates, a home building stock wouldn't be the best, but the quant rating system saw it differently. And the stock pick has paid out tremendously in less than 2 years and has delivered gains over 350%. Back in 2022, Tech stocks were getting absolutely destroyed, and most people were selling these stocks and not buying. However, AlphaPix recommended Supermicro Computer despite this. The stock is currently up over 400% since this recommendation, and at one point it was up over 1,000%, meaning a $10,000 investment would have been worth over $100,000 in less than 2 years. You don't need to wait years to get market-beating returns either. Back in April 2024, AlphaPix recommended Brinker International, which owns restaurant chains like Chili's. I wouldn't have thought to buy this stock in a million years. But the subscribers of AlphaPix are happy they did, because in just a few months, the stock is already up 36%. AppLovin is another company I've never heard of, and they're in the software industry. This was another insane winner from AlphaPix, and it's up over 160% in less than a year. This is how the AlphaPix portfolio managed to be up over 120% while the market is under 50%. A lot of stock pickers claim to beat the market and get all these amazing returns, but almost all are lying. If you've watched my videos, you've seen the kind of results these stock picking gurus get. These underperforming gurus charge thousands and thousands of dollars for stock picks that end up losing 90%. AlphaPix is typically $499 per year, which is an excellent price for what you get. They could easily charge 10 times that. The good news is, if you buy through my link in the description, you get an additional $50 off. I highly recommend AlphaPix for everyone, and if you're ready to start beating the market, click the link in my description and get started today.